stand up if I may. So just good morning, everybody. Welcome to the breakfast meeting this morning. My name's Chris Reed. I'm the COO of AXA XL. What I think is also relevant this morning is I'm also kind of chair of a number of our market committees. I think that's why we're keen to have not only a kind of company representation, but I also chair the LMA operating committee. So kind of we're in the thick of a lot of the BluePrint too, with fellow COOs and many operational people in your business to how we get this done. I'm also chair of what they call the association's executive board, so that's how we try and bring the brokers, the company market and the Lloyd's market together in that committee as well. And they've also got what we call the TTB, which is the Transformational and Technology Board, which is actually working with the joint venture, and the joint venture is kind of that link between the market and DXC, who are actually delivering a lot of the technology change that we're start to see over the next kind of 12 to 18 months. It's great that you're all here because I'm sure there's still lots of questions, and even though I sit in all of those committees, there's also a huge amount of questions still from the market about what we need to do, when do we need to do it, what does it mean. So I think there's going to be more and more of these sessions coming up over the next 6 to 12 months as we get closer to some of the deliveries that we expect at the beginning of 2023. I think from a timing point of view, certainly for the first 3 or 4 months of this year, I can see the confidence is building. If you listen to the joint venture, particularly around what we expect to see in Q1 next year, there's a very high level of confidence that they will deliver what we expect to be delivered at the end of Q1 next year. What that means for us is that that's actually only 11 months away. So it's going to happen. It is happening. So we need to start acting. So if you're not doing something, you should be doing something. And if you don't, and you need to understand more around what you should be doing. And as I say, it's not 100% clear, but what is clear is that doing nothing is not really an option right now, because it is coming, and we will start to see the kind of. We've already got some things live, but I think certainly what will start to accelerate as we get into Q1 next year is the third and the fourth sequences, which will actually start to have a material difference as how we trade in the market. I was just going to touch on benefits because there's some big numbers, and I think we've got a big number on one of our slides this morning. It was thrown out there with BluePrint 2 a number of years ago, around 800 million. I just wanted to talk about that number because in reality, probably only 10 to 20% of that number is actually the cost of the kind of infrastructure of the market. 80 to 90% of it is our own costs. It's the managing agent's costs. It's the broker's costs. So they give you 800 million, but actually, if the brokers do nothing, if the market does nothing, we won't realise that 800 million. It will only be 10 to 20% that we realise. So we have to do something, and then if you need to realise it, you're going to need to invest in your own organisations to unlock some of those benefits. So I think that's important that we understand more and more how we unlock that, or we'll all be sat there telling everybody I'm sure you will be the same as me. In order to get investment, I need to explain to the company that there's going to be benefits, and it's not just going to drop in our lap. We're going to have to do some stuff to make sure we can realise those benefits. And I think finally, I was just going to say just around the aspiration. So clearly the aspiration is to digitise the market, but I think more importantly, it's about making sure that Lloyd's London market stays at the forefront and as a leader has the competitive advantage over many of our other markets. And I wanted to share that because from an AXA XL point of view, we've got a transformation program globally. And believe it or not, actually the Lloyd's and London market is typically 3 or 4 chapters ahead of what I see in many of the other countries. So even though often when we sit in there, it doesn't actually feel that transformational, it actually really is transformational. And if we can really embrace this over the next 12 to 18 months, I think it can really make a difference, not only for us within our organisations, but it's quite it's a superly powerful change for us in the market as a whole. So, you know, I encourage you to kind of ask questions today, and if it's not today outside this, reach out to any of the people that are here today, because we're here to help, and we genuinely want to make this a success over the next 12 to 18 months.
That should have been up there while he was talking, so. Well, my apologies.
That's me. A bit older now.
Okay, so first of all, I put a tie on this morning, and the idea was I thought it would be a good kind of gimmick, because everyone was going to turn up in jeans and T-shirts, and I'd be able to turn around and say, I'll take my tie off now. But a few of you have turned up with ties, so that gag has clearly not worked as I would have hoped. Before we start, I just wanted to do one thing. I want to just ask a couple of questions just to get a sense of just where everyone's at. So, I mean, how many people feel they have a good understanding of what BluePrint 2 is? A little show of hands would be useful. Okay, that's helpful. So there's that one. Next question. Who has read the MRC version 3 document? Well, that's 4 more hands than I expected to see, so that's good as well. And how many of you in the room currently would be relying on someone else in your organisation to actually have done or have knowledge of BluePrint 2 and have read the MRC version 3? Yeah, perfect. So it kind of goes along with what I had thought would maybe be the case. So anyway, the intention of today. So for everyone here, hopefully, we're going to cover off all of these things in some way to make sure that as you leave that you have at least understand an example of what it was that has driven the need for this modernisation programme. Looking at the approach that's been taken now versus perhaps some of the past approaches that have been taken on this stuff. What does it look like now? So what's happened and what is it that we understand has occurred thus far? Will there be any regulatory implications to all of this, considerations, things that we should be thinking about? The roadmap, as Chris has said, there's a lot due to happen over the course of the rest of this year and into next year. Things to consider as an organisation, whether you're a broker, carrier, service provider, things to think about as we progress. I came across a little bit of information online which I thought I would share with you. It's quite interesting because I think it talks about a little bit perhaps of a disconnect between what it is that we perhaps view as being pivotal within the technology space versus what it is that perhaps BluePrint 2 is trying to do. And then some takeaways, just some thoughts and ideas as to where it is that we feel people need to be in order to be able to embrace everything that will go on within BluePrint 2. Okay, so this is one example. Okay, there's many reasons as to why the modernisation programme took place, but one example. So a number of years back, working as I did on the original LM Tom programme, I got to read a document, and I'm sure actually it was produced by the Boston Consultancy Group, but what it was a document that spoke very much to the cost of actually running the London market. And at that time, back in 2013, so actually 10 years ago, so it's a significant time back, it was estimated at 8.1 billion. So that's all of the costs really that are associated with your staff costs, technology costs. I mean, Chris referenced it. It's not just a technology piece, it's just the entirety of the market. Now, bearing in mind that this is, in the main, a subscription market, then there's a lot of repetition. So there's a lot of repetition around the processes that we do, same stuff being done in multiple organizations. So you can see from that it is absolutely, I think, and I'd asked Peter the question about the 800 million reference. It just seems kind of a little bit too convenient that 800 million is roughly 10% of what it was back in 2013, if you look at 8.1 billion. So is 800 million achievable? I think, again, back to Chris's point, I think if you look at everything in the round and you start to think about the possibilities of looking at the repetition within process and the opportunities that just that alone would bring, then I see no reason as to why a 10% saving within the market is not achievable based on whatever the cost structure might be now. And I don't know what it is. I don't know if anyone has done any other calculation post the 8.1 billion piece, but that's kind of where we're at there. I've wrote these cards out with big letters as well so that I can read them without my glasses. So, if I think of all the initiatives that have taken place in the past, a lot of the stuff has been driven from a top-down basis. So it's really the guys at the top of the house looking at what it is that goes on within their organizations and coming up with thoughts and ideas as to what might look better. Ultimately, I think, though, because a lot of the activity could be broker-driven, then there's a little bit of kind of, what's in it for everyone. So how do you make the change without it just being something that impacts kind of one body of people? So I don't think the top-down approach has worked. And I remember sitting on I spent a couple of years on the PPL board. I remember a conversation with David Ledger where I said to him, would it not be better if we actually looked at how we do this from the bottom up? So just looking at the stuff that is currently broken. So, at the time there was definitely issues with regards to the way in which there was a massive amount of rework involved through submissions going through from brokers into the bureau, queries, questions, problems. That then filters through to transactions that are going through into the carriers, which don't match the stuff that they believe they're expecting to see, and you just have a lot of friction. And David said, look, if the answer to all of this is that we just look at how do we fix the process, then no one's going to be interested in doing any kind of technological changes and advancements around placement. He said, so we've got to start at the top. Well, it didn't work. We just basically didn't get anywhere, and whilst I know that there has been a massive uptake in terms of the use of PPL, I don't think it's where, if you had asked the question maybe 4 or 5 years ago, I don't think it's where everyone thought it would be. So we've seen an industry where things tend to be event-based. Something happens, we react to it. I'm old enough to have been there when the Piper Alpha situation, and I don't know that there's many in this room will actually remember Piper. You've probably heard of it, but you probably weren't born maybe when it happened. But the Piper Alpha, it changed significantly the way in which claims activity took place within the market. So we went from monthly settlements to weekly settlements, and that was for just Piper Alpha to begin with, and then it moved on to being everything. But it just showed you that the market itself recognizes that as situations occur, then you have to make the changes and adaptations within the business to kind of work with it. So it was an important thing. I think another key factor in all of this is that looking at BluePrint 2, it's foundational. Okay, so in no way would I suggest for 1 minute that what's happening in BluePrint 2 is going to be is going to be the end. But what it is it's absolutely the right place to start, because it's taking, is it 36-year-old technology? 36-year-old technology. Okay, so we are currently working with technology that is 36 years old. Probably some people in this room are not 36 years old. I mean, and we're updating it. And we're updating it with technology that is already very well tested. I mean, you've only got to look at things such as, you know, iTunes to look at how our subscription market payment system can be applied across a kind of mass. And the London market is not going to be giving transactional volumes anywhere close to something that iTunes would do. So clearly, this technology is technology that is going to be effective and it will work. Okay. Actually, before I move on, I'm going to kind of, for the rest of the slides, going to be interacting with the panel and kind of getting some answers to some questions to make it a little bit better in the sense of these are people who are going to know this stuff far more intimately in certain aspects of it to what I would. So first question is going to go to Peter, and it's just to really understand from a program perspective what's going on and what the levels of confidence are.
Okay, great. Thanks, Lance. So for those that don't know me, my name's Peter Houston. I'm a special advisor for ICSR, but I also work heavily with a joint venture on market engagement. So, you know, really looking at what the program's up to and the level of confidence I've got, well, there are three kind of main reasons why my confidence is kind of sky high at the moment, some that has been touched on by Lance and Chris. The first one is, you know, for those that don't know, we're using 36-year-old systems, posh and lids. I know there's people in the room that most probably helped build that at times. So, you know, those are kind of old systems that are really difficult to change. You know, and, you know, the people that are working on those systems are either walking the dog or sort of like, you know, don't want to get involved because they're green screens, yeah? So we have to change those systems. It goes without saying. And, you know, all of the market use those systems. Yep. So you are going to have to change. You can't not change if you want to use, if you want to pay premium, or you want to, like, you know, if you want to get premium, pay claims, refund claims, you are going to have to make these changes. Secondly, and it's the bit that Chris touched on, we're building this new technology on an agile basis, and because of the size of the, you know, the program, we broke those, the delivery into sequences. So we've got 5 sequences. The first sequence is foundational, so it's like the plumbing of the system. The second sequence is global for open market, so this is the way the rest of the world would necessarily account going peer-to-peer with each other. The third, which would interest most people in this room, is for London open market. That's sequence 3. Sequence 4 is for delegated authority, and sequence 5 is for the gateway, so, you know, what the kind of interface that connects the front part of our process to the back part. The great news is, as of the end of this quarter, sequence 1 and 2 have been completed. Yeah? And what's really important about that is sequence 1 and 2 are the backbone of the technology that's being delivered to move forward. So when we come to sequence 3, we're overlaying, it's the same technology, but we're just overlaying and building what differences are required to work for the London market. An example of that would be the subscription way that our market works. So global works peer-to-peer, so broker sends to carrier, and that agrees there. What we're building in sequence 3 is for broker to send to multiple carriers. So we're already on that journey. And finally, and this is really important, the technology, or the way that we're looking to account and agree claims, is using a global standard, which is Accord, that has been, I think there's their 15th year anniversary in June this year, and it's a group called Rushlicon, which are, you know, brokers, carriers that all work together to use this new way of accounting and agreeing claims. So it's been going on for 15 years, and they've had some fantastic benefits off of the back of that. And for years, they've been trying to work this way in the London market, and what we're building is to do exactly that. So for those 3 reasons alone, and there are a lot more, you know, that's the reason why I'm hugely confident. We're already building it. You know, it's using something that people are already using. you know, I can see no reason why, you know, this wouldn't be a success. The only, not saying that there won't be bumps in the road, there absolutely will, but I'm hugely positive about where we are at the moment. So I know that was a long-winded way of saying I'm confident, but I thought I'd give it a little bit of detail.
You're never short of a word, Peter. But Ben very kindly did all these so I could just do them one at a time, but I just would rather have them all up there at the same time. So, story so far, so where are we at? What's happened? So the roadmap's confirmed. So things are happening, and as Chris said, this is foundational. No is not an option. We really have to embrace this and do it. As Pete's mentioned, the confidence levels are high. There's strong communications and good collaboration within the market. I think the CDR thing with Accord is kind of crucial as well, because in the past the reference to either Lloydisms or Londonisms has been big, and moving away from that I think is key to positioning the London market well. Market consultation is underway, and the workshops have begun. So we have already had an initial workshop, and I know there's a few more to come. The timing of those may be different to what has been published so far, but they'll be there to kind of support and help people along the journey. So that brings me to another question, a question of Chris, and really it kind of picks up on your kind of market role, Chris. And it's really the talk of collaboration. So as a work group lead and as a member of maybe various committees, are you sensing that this is something that people are, you know, that they're bought into and they're ready to embrace?
Yeah, I think undoubtedly with all of those committees, everybody shares the aspiration. And I think to Peter's point, we've got increasing confidence around the deliveries, as I said at the beginning, the timescales as we get into 2024. I think where a lot of the market, or say actually all of the market, including ourselves, is still getting absolute clarity around what we need to do and when we need to do it, in order that when the sequence 3 and sequence 4 are live at the end or this time next year, what will have to have been true in our own environments in order for us to actually be able to leverage the changes in that technology. And I think that's why it's really important that we start to engage, directly with the joint venture and what's being built. So because our environments will be different. You know, we had this conversation yesterday. Some people are on Veris, some people on SQL, AXA Excel. We've got our own technology that we use too. So we've got one that's already in the company market where we actually use some of the technology already, but our Lloyd's platform, it's not built in the same way. So we've got some changes that we really do need to make, or we won't be able to leverage what's being delivered by this time next year. And I think so everybody will have a different kind of scenario, and if you engage in these, with the groups, with the joint venture, I think then you'll start to understand more of what you need to do and when you need to do it over the next 10 to 12 months.
Thanks, thank you. And Peter, consultation, how's that going?
Yeah, well, like yourself, I've been involved in previous market modernisation efforts, and I think the consultation and engagement this time around has been pretty solid. If you look at the consultation around the MRC Market Reform Contract version 3 and the Core Data Record 3.2 and the process roles and responsibilities, I think the job the Data Council have done has been absolutely tremendous. Going out, I know there's a lot, but sadly our market, it does need that kind of information. You can't make those type of changes with just a kind of 4-page PowerPoint, but we are trying to do better and making it more palatable. But I think that whole consultation throughout 2022 and continuing through 23 has been great. From a BluePrint 2 perspective, we have a dedicated engagement team. This is a kind of cross-organisation team, so there's people from Lloyds, there's people from the JV, there's people from Limos, that all work together as one as an engagement team. The reason for that is we wanted the message to be consistent, so we didn't want 3 different sets of groups going out saying, like, you know, something slightly different to the next person. And we've literally, so for every carrier and the top 50 brokers, they have each got a engagement lead. Yeah, so that's one person that they can talk to about anything to do with BluePrint 2. So that's the kind of either one throat to choke or one back to pat. Yeah, so we do that. So there's a coordinated approach. As Chris said, we have it's called EC10. So we have 10 groups, and they're generally communities of carriers or brokers that coalesce around the different service providers they use. So we'll have a kind of DXE group, a Veris group, an ADGO group, you know, a Trace group on the broking side. So, you know, from that perspective, I think we're in a really good place. We also have a website called blueprint-2.com. I'm not expecting everybody to remember that, but there's a huge amount of artifacts on there, customer journeys, which is, you know, the what, benefit frameworks, which is, you know, the why, and then you've got implementation playbooks that the LMA kicked off last year, which were great, which is the how do we do this. On top of that as well, and you'll have all your, so if you're a company, you'll be able to see who your engagement lead is through that website. We also have a really easy way to ask questions. So there's a QR code, you go into it, you have to answer 5 questions. One is, what is your name? What's your email address? Can you categorise your query and tell us what it is? So from that perspective, you know, I think engagement is pretty good. And we also record how people are understanding, you know, the customer journeys, the benefits, and that, and we kind of score that because we didn't want it to be one way. We didn't want to just be sort of like, right, we're going to send out loads of stuff. And that, again, you'll see their comprehension surveys on the website. So you'll get a good understanding of, you know, where people are in their journey. There's still loads to do. I think Chris is right. There's some big questions that are still outstanding, but I think we're on a good platform to keep that going.
Thanks, Pete. Okay, so moving on to the subject of impact above and beyond either technology or operations. It's really looking at what the regulators may be thinking of all of this. So, I mean, look, as we mentioned, it's a foundational platform for future digitisation, normalisation of data standards to help and support a reduction in rework, cloud-based technology, which means that any changes or adaptations can be done faster, and also improves the resilience of the system, of the technology. Modernising claims, and it's an interesting part. It's one of the things that I think might be tweaking the interest of the regulators, and that's the changes in which you can have where you can have claim settlements that can take place direct now, so you can actually have a claim presented, but the actual settlement of the claim being done direct back to the client. So it's an option to make adaptation to the way that you would be settling claims. I think aligning the standards, so looking at delegated authority business, aligning the standards to allow them to enjoy some of the pacier activity than perhaps they had previously. And then really supporting automation, so looking at the creation potentially of APIs that could lead us into an automated world. Some organisations could be there, but just providing that backbone to kind of give them that opportunity, I think, is key. So, in terms of questions, moving to on regulation, a question for Claire, and it's really, Claire, how do you think the regulators may be viewing this change, and what is it that you feel that organisations should be kind of mindful of as they are working through this and moving back into the new kind of digitised world?
Thanks, Lance. Morning, everyone. I'm Claire King. I'm Head of Risk at ICSR. I think it's probably the obvious answer in as much as the regulators are always concerned with maintaining policyholder protection and minimising market harm. And I think they will look to understand the development in this area, in those terms. And to sort of Lance's point on claims might not be instantaneously payable at the moment, but they are seamless from the policyholder's point of view. So that can't change. That can't be jeopardised, and the regulators will look to understand, how that's being managed. And I think in the same way with the cloud-based stuff, there's lots of work being done on cyber resilience, ensuring data security. Obviously, the GDPR piece. Again, the regulators are going to want to understand that that's not going to be jeopardised. There's going to be no issues with that. And I think this is such a wholesale kind of transformation project and change. They'll just want to understand that strong change management processes are in place, and this really kind of supports the operational resilience work that everybody's been undertaking. This should be something that's starting to be embedded in your processes. And we know how important OpRes is for the regulators. We've seen the fine that's come out this week for the ex-CIO of TSB. So this transformation project has to follow all of those change management processes, and I think that's essentially what they'll be concerned with at the moment.
Thank you, Claire. Okay, so this is the roadmap, and I've taken this information directly from the BluePrint 2 website, so they've got their own time chart on there. So currently, I've kind of put the line there to kind of suggest where we are today. What we have is sequence 2 has been released, and we're moving towards adoption. The MRC version 3, 237 pages of pleasure for all those who have read it. And then we are due, we've had one workshop, and we will be due some others. But we're going to have, I think when Chris opened, we're going to have a fairly significant 18-month. There is a lot of activity, as you can see there. A lot of things have to happen, and some of them are clearly a lot more significant than others. But it will require a very heavy level of engagement and support from within the market. So we have coming forward, we've got sequence 3 and 4. We've got CDR alignment with the COD, training. And I think training is one that it will be interesting to kind of, get people's thoughts on how they feel organisationally. They will be prepared for that, because there is never a good time within the market to kind of enter into some sort of training program. There's always something going on. There's always something happening which kind of stops it. So understanding what people's views and thoughts are on that would be interesting. So that kind of moves me on to a couple of questions, and I think there's a couple of questions anyway. Yes, it is. So first of all, for Peter. So, I mean, within the project itself, has there been any contingency built into the release? That's the first point. And the second point is, with what you can see needs to occur over the course of the next 18 months, what do you think will be the biggest challenges that the market faces?
Okay, well, I'll break the question down to and answer the first part first. I think in most large programs, most project managers will always build in, or program managers will build in, elements of contingency. But what I would say, there is a huge piece of work that's going on at the moment that I think will really help. What you're seeing up there at the moment is a program that's kind of based on a big bang approach. So, effectively it's, building all those sequences, and then we get to a point in time somewhere in the second half of 2024, and we say, right, on Friday we've been using this system, come Monday, we're going to flick a switch and we're all onto the new system. Yeah. As you can imagine, that has quite a lot of risk attached to it. You know, I think it's certainly from the people that are managing or governing this program, quite rightly have pointed out that, look, this does actually, you know, run with a lot of risk. And they've asked a team of people to kind of go away and say, look, can you have a look at this and say, is there any way we can de-risk the current kind of big bang, and we call it a big bang approach, which I think most people, you know, when you look at it, would say, yeah, that kind of makes sense from a risk perspective. You know, so at the moment, what's happening is people are looking to say, well, look, can we minimise the risk? You know, now that could be looking to say, look, can we create smaller, more manageable implementations that are most probably not going to have as big an impact on the market. To be honest with you, even if they're smaller, they will have a big impact on the market. I don't think there's a way around that. But the good news is you know, the review should be, or the outcome of the review is due to be provided within Q2. So that's great. And within that, I would imagine there would be, you know, coming out with another set of time, whether it's a set of timelines or changes or the way that we're delivering within the timelines, you know, any kind of contingency would definitely be built into that. With regards to the challenges, that's a really good question. You know, from a build perspective, we're building it on an agile basis, and like, you know, I don't want to sound like Donald Rumsfeld, but I will. You have the known knowns, you know, I always get this round the wrong way, the known unknowns and the unknown unknowns. Certainly from a build perspective, you know, trying to catch those unknown unknowns, you know, sometimes they do just turn up and, you know, you need to react to them. From a market perspective, it is always going to be around adoption. You know, our market, as wonderful it is, and as much as I love it, I've got 300 organisations that connect to the centre, ranging from global organisation with 10,000 employees to local organisations with 10. I think we've got a broking community, there's 2. Yeah? This change is going to mean many things to a lot of different people, and what we're trying to do here is create standards. You know, our market is not, with the best will in the world, standard at the moment. So trying to kind of draw that line between, you know, doing the right thing, creating standards versus, you know, how people feel today and having used something for 30 years and being very familiar with it is always going to be an uphill struggle. But as I've said before, I'm very positive that, you know, what we're trying to do is absolutely the right thing. I just think there will be some bumps in the road, I'm sure. And adoption's, you know, one of those things that I think we're doing our best to work on.
No, I was just going to add just around the big bang. So maybe it won't be a big bang and they do de-risk it, but I would still encourage you to be ready as if it was a big bang, because actually the sooner you're ready, the sooner you'll be able to adopt what's available and actually start to drive your own benefits. So I would kind of think of it a little bit more selfishly within your own organisations. The sooner you kind of adapt to that, the digital services, and you stop using the heritage I think we refer to, and you live in that kind of transitional environment, I think you will start to realise benefits within your organisation quicker. So I kind of wouldn't wait to see what it's going to be. I would start actually making sure that you're going to be ready for when it does happen.
Yeah, brilliant. Totally agree.
I think you've kind of covered my question that I was going to put to you. That's okay, no. So I won't ask it. The question was behaviours needed in order to kind of stay on track, and I think Chris has covered that fully. Okay. So from this, I've kind of came up with what I think would be, I better put my glasses on for this one, 8 major considerations for planning. I think the technology piece and actually looking at your architecture and making sure that your architecture is going to work for you as this is implemented is, it's going to be key. I mean, it's going to be different for every organisation, but I think just having it as a kind of thing at the back of your mind each and every time you're actually reviewing that is critical. Training, as I've mentioned, training is something that is going to be required across the market. Getting the timing right for that, identifying what that looks like, what's needed, and making sure that the right people are engaged is important. We haven't kind of touched on one thing, which is the cash thing, and I'm going to say this with a degree of maybe I'm overstating the situation, maybe I'm not appreciating the situation enough, but the changes to the way in which cash movements will occur is going to be quite significant. Previously, we live in a world where everything gets batched, and then the batch is a single payment with a file telling you what that's going to be. We're going to move towards an environment where there will be an ability to actually make cash movements happen instantaneously. So you're not then looking at a batch situation, you're looking at I want that cash now rather than wait for it to come through on the batch. I just don't know how many organisations are geared up to be receiving multiple messages like that, or cash movements like that, in terms of how that will look within their technical ledgers and how they'll actually deal with that. It's an interesting kind of conundrum because everybody wants the money fast, but it could be that they're going to get it a lot faster than they can actually consume the data and information. Third parties, I think an awful lot of the activity that takes place within this space is going to be with a number of service providers, so it's ensuring that the service providers are actually part of this journey and that they know what's going on and that they're engaged with you in terms of everything that's happening so that they can make the changes they need to make in order to do the work that they have to do. We have already mentioned the fact that on the global piece, so that the early sequence has been done. And then just really that's looking at, we can see from that just basically whether there's anything that we can learn so that we can kind of look at future sequences and make sure that anything that's occurred that has been a problem, that's a wrinkle that's been ironed out and we can take it forward and make things a little bit easier. The MRC version 3, I think that although that's not I think I'm right in saying that's not a JV activity, the MRC thing. But I think it's actually quite important because it's a key thing in terms of the London market normalising itself with global standards. I think it's absolutely pivotal. And then the last two, and I've separated them rather than have them together because there's a cost to this. And it's the interesting thing, I've been doing a lot of coffees and chats with market colleagues just to try and find out whether or not this is a particular matter that they've got on their agenda in terms of, are there any budgetary needs for this activity? And if there are, do I know what they are? And have I actually gone forward to my executive, my board of directors, whatever, to ensure that budget is in place to do this stuff? In the main, I'm getting a sense of the fact that currently there's probably not as much engagement at that level as maybe I would have expected. But I think that as we start to move into a budget cycle for 2024, it is absolutely essential that that topic is front and foremost really in people's minds. And then the benefits, and this is really around the case and it get mentioned at the beginning. Now, there's a massive saving opportunity, but that saving opportunity requires really looking at what it is the technology is doing and looking at your internal operating model and looking at the ways in which we work within the market to try to maximise that opportunity and realise that benefit. If we continue just doing what we do, then nothing gets realised. We have to then look at what the opportunity is in terms of what does the change give us a chance to do, and and I'll throw it out there, things such as, do we all have to do the same process? Right? Do we all have to do everything repeatedly? Or can we look at ways of actually doing it on a one-and-done basis? Right, so that will then lead on to a few questions. And I want to start with Peter. So from the global piece, are you aware currently of anything that you know will be used to take forward and support perhaps releases 3 and 4?
And, look, without that, we're building on an agile basis, and I don't know how many of you, know about agile, but there's the way it works is it's broken down in program increments, and which is a kind of 3-month period basically of where you build the technology for that point in time. And at the end of each one of those sessions, it's called a retro meeting, which you generally look at what went well over that course of the period and what needs to kind of be improved. The beauty of breaking this all down into sequences means we have a fantastic point in time where we can look at what happened in sequence 2 and say, right, okay, what else is it that we need to do to make it better for the future? So absolutely, so if there are any kind of learnings from sequence 2, they will absolutely be being reviewed and taken into consideration.
Thanks, Pete. And Chris, I mentioned training, and this is a question to you as a practitioner rather than as a market individual, and it's really, what is the timelines? Do you see that providing you with any challenges as a practitioner, looking at how you would adapt that training into AXA XL?
I was perhaps comment on timing relative to the budget point initially, then I'll talk about training. I think if you leave it until 2024, it's too late. I think you should be having that conversation now, because and trying to understand how much development that you need to do within your organisations between now and Q1 next year, because essentially that's the point in time where we would expect to see some of the new capabilities. And I think it's worth trying to understand from how much that actually is and how much you have to do yourself. And I say that to Pete's point around the EC10, because from an AXA XL point of view, it's our own platform, so I can't rely on ADGO as an example to make the changes for me. I have to do it myself, so clearly that's going to cost money. But if you're an ADGO customer, they're obviously trying to look at what they need to do with their own systems, so you may benefit from them actually making that available, and actually the level of investment that you need to make might be different. So I think it's kind of worth understanding that. From a training point of view, I think at the moment the training should be more centred around, so what's happening, more information around those sequences and timing, so people understand what's happening and when it's likely to happen. And I think as we get to the end of this year, it's more about, so when we actually get to, let's call it market acceptance testing, and to a point where we potentially going to cut over, I think we can start to change the training to actually, as a practitioner, you're going to start to receive this, and your world, to use your analogy, may have looked like this on Friday, but actually on Monday, these are the changes that are going to happen, and this is how you're going to have to adapt your behaviour. So that's kind of, I'd look at the training from those two angles. So initially, just understanding more about the programme and what's going to happen and when it's going to happen. And then the second component of that is, these are the changes you're expecting to experience, and this is how you're going to have to adapt to those.
Thanks, Chris. And Claire, I mentioned the third-party aspect. On outsourcing, what do you think we should be looking at in terms of op-res?
I think I'll probably repeat what you have said already, and I think it's engaging with your third-party providers as soon as possible. We've heard a number of times this morning, this is happening, it's not going to not happen. So engaging with your third parties, ensuring that they understand the requirements of them, for them to give you comfort that they can sort of support on those deliverables. And have you got contingencies if you're not getting the sense that they might? And obviously you're part of communities as well, so probably very sensibly communicating with them. You kind of have to move forward as a group when you're part of these. So everybody sort of moving at pace together is obviously the ideal situation. So I think it's just strong engagement, strong communication. Again, the op-res piece and the outsourcing requirements, mean that we should all have been moving in that direction anyway. So hopefully the framework is helpful. But it's about thinking about it now and asking the questions now, so you give yourself that time to make sure you've kind of managed all of those risks.
Thank you, Claire. And Peter, so we mentioned benefit realisation. From within the programme, what's being done to help organisations understand what the benefits could be?
Okay. So I mentioned the benefit frameworks on the BluePrint 2 website. There was a body of work that was done, it was most probably 6 to 8 months ago now, where we come up with 100 and I think it's over 120 different benefit opportunities, and those were categorised, you know, into faster, better, cheaper, and, you know, from a carrier side and a broker side. So, you know, and we realised because of the different shape and sizes of all of our customers that those 120 benefits are not going to apply to everyone. However, for me, it's a great place to start looking to see, you know, what we've got. There is other sources, and I mentioned before Accord and Rushlicon. You know, those that don't know, this group have been practicing this accounting method for 15 years. Yeah, they have got case studies, or like that anybody can go into. It's on a Accord website where, you know, you would get you would get brokers, carriers, you know, selling the virtues of, you know, what difference it's made to their business. So for me, there's plenty of places that you can go to kind of get the benefits. But like with all of these benefits, they need to be tailored to your own organisations. Yeah? You need to look at what your own organisation looks like and do these benefits apply to my organisation. But it's there. We will also be working, you know, as we move forward, we'll absolutely be looking for people that really want to kind of get on with this and do it, and any learnings that come out of that will absolutely be shared.
Thanks, Pete. Okay, conscious of time, I will quickly run through. I think we are going to be sharing these slides, aren't we, Ben? Yep. So this is, I mentioned kind of at the beginning, I got this from a PwC document that's online, and that's the address for it if anyone wants to kind of go and look at it. But it was interesting because when I looked at it, the question was really, from a technology point of view, where are you at? And this was a question asked of, I think it's 35 senior execs from within the marketplace. So where are you generally within your technology transformation program, and what does the next 12 months look like, and so on? So most important drivers for technology transformation was lowering the expense ratios and leveraging MI from data. The least important, when I say least, I mean it was the bottom, was BluePrint 2. But with BluePrint 2, you are able to influence your expense ratios, and you are able to leverage MI from data. So it was interesting that there was a disconnect between those two things, because one absolutely has an impact on the top two. So it suggested perhaps a little bit of a disconnect and understanding as to what BluePrint 2 was and what it was doing. In terms of the active investment, digitised pricing, underwriter workbench, reduced rekey and placing platforms, least important, APIs. Well, APIs will give you a reduced rekeying. So again, it's that appreciation piece. Is it completely there, and has the communication between the people who are the subject matter experts within the organisation actually gone up to the level that it has to create that appreciation? And the other piece in terms of the biggest risk to technology transformation, that's their standard. So to end our takeaways, and all we've done here is we've just produced a series of actions that we think if everyone walks away and kind of thinks about this stuff, and we're giving roughly indicative timelines based on what it is that we've seen within the time chart from an earlier point. So no, it's not an option. It's been said now maybe 3 or 4 times. This is something that is going to affect everyone. We have to get with it. Going back to the previous point, ensuring that there is absolutely full alignment between the people who are front and foremost within the programme and the senior management teams that are responsible for creating the budgets that deliver this stuff. Remaining engaged with risk and compliance throughout. As Claire's already pointed out, there's more to this than just looking at it from an operational or technology standpoint. There's a greater degree of impact, and it's making sure that that impact is understood. Ensuring that your architecture is in the place that it needs to be in order for you to interface with the gateway. Training, structuring, planning what it is your training needs will be. Understand the cost for 2024, so think now about what it is that's going to be happening in 2024 and ask the question, are we in a position where we can deal with this? I think recognising the benefits, I think understand what the benefit opportunity is, and someone owns that benefit opportunity and someone ensures that that gets delivered. Consider your operational resilience, so looking at your third-party arrangements and making sure that everything that needs to be done in terms of your engagement with your third parties has been thought through. I mentioned the cash movement, so really just looking at what the technical accounting impact may be of some of the stuff that's happening. And then also the direct claim settlement. It's an example of a situation that could occur. What are you doing internally? Because put it this way, you create transactions, you have to clear the transactions. If a payment's taking place on a direct basis, how does that transaction clear? So just actually looking at what it is that you're doing internally to deal with what the potential process changes may be. Okay? With that, I shall close. And thank you very much for being here. And thank you very much, guys, for the answers to the questions that I posed. And it just leaves for me to say, does anyone have anything they would like to ask that we may not have covered?
Absolutely. If you think about it, I mean, I actually think net settlement is most probably the apple or the jewel in the crown for the London market. Yeah, I think, you know, if anything, the idea of trying to expand that opportunity to other areas is most probably a good one. So yes, is the answer to that question.
And has any thought been taken to the way that would work without a post-start process?
Yes, although it's not at this moment in time. We're still looking at the way we're actually kind of delivering the build is we've broke it into segments, and settlements is a part of that. So we're not quite there yet. So there is obviously as you can imagine, quite a lot of debate of how that's happening, because we're still going to have to use the current payment, the STFO, and that. So we're not quite there yet, but it is being worked on.
Anyone else? Yep.
So a little bit similar to Anthony's question there. Yeah, absolutely. I mean, the area that we're focused on at the moment, certainly with regards to faster payment, is around claims. Yeah, so we've already, this isn't, by the way, it's already live. There's certainly on the delegated authority position, we work with an organisation called Vitesse that allows for delegated authority, if there's payments that need to be made, we can make that in kind of 2 hours. So, you know, we know that there's going to be elements of kind of disruption there, because it's completely different to the kind of way we work today. As I said, it kind of ties into that whole settlement piece. So there's more work that needs to go on that. But the challenge really is it's for organisations to start thinking about, well, okay, well, look, if all of a sudden I'm going to be able to pay this quicker, you know, who within my organisation is going to be impacted with this? Yeah, because, you know, I guarantee well, I'll be interested to see how many treasurers are sitting there thinking about, well, we can now pay something in 2 hours. What does that mean to my overall account? So I think my kind of response is, look, we're working out, and we will obviously communicate that because it's hugely important. But I would also be, in my own organisation, start posing the question and making sure that I'm talking to all the relevant parties. So it's not just an operations and IT thing. It's, right, your credit control, your finance, your treasurer, that they all need to know, because, you know, these changes, and I think that's what we're saying here. This is one of our biggest challenges. You know, we've been working in a certain way for many, many years, and we're about to potentially flip it on its head, all for the benefit of the customer, by the way. This is all about making London the preeminent, or continue London being the preeminent market for specialty business, but some things are going to change in order for us to do that. And so all I would say is make sure that people in your organisation are engaged, and even use it as a hypothesis. Oh, yeah, I'm going to struggle to, as an example. How about that? That's better. Saying, well, what happens if we need to pay something in 2 hours? What is it that we need to do and change and be ready for?
Okay.
Watch this space.
Anyone else? We must have done quite a good job. Oh, there we go. Anyone?
Chris, you mentioned earlier that companies like AXA wouldn't have solutions to the changing themselves. How much do you think the standardization that BluePrint is about to deliver move the needle towards procure in terms of business case for that kind of system?
I think the standardisation is helping us, actually, particularly if you're thinking about it from a data point of view. One of the things that we're striving for is to get more structured data, and whether it's via the CDR or whether it's via MRC version 3, if we can get that data in a more structured fashion, we'll be able to use it and drive more benefits through our organisation. So I think that for me is one of the, and I agree with Peter, they've done a great job so far. So the more standardisation we get around that and consistency that we get with the data, I think that will help us drive benefits, and kind of the systems become less relevant, actually. It's more about what can you do with the data when we receive it in the structured fashion.
Any others? In which case, thank you very much, everyone, and enjoy the rest of your day.
Thank you.